the quiz and come back. Okay, so let's have a look at the final question for the day. It's question number 3. So we are going to looking at how to account for a convertible bond. So in fact, in case of the examination, so you're definitely going to have one question on this convertible bond. So in fact, in the case that is given, so I can say for sure this kind of question, a similar kind of question is there, right? Okay, so therefore, it is pretty much important to know how to account for this. So let's see. On 1st of April 2017, the Super PLC issued rupees 5 million of convertible bond to Magna PLC. It's S&M. The bonds have a life of 3 years, a face value of rupees 1000 each. So when it comes to the par value, the face value of the bond, that is rupees 1000. And they offer interest payable at the end of each financial year. So interest is payable in arrears at a rate of 8% per annum. So that is the coupon rate. So the coupon rate is 8%. The bonds are issued at their face value, where each bond can be converted into 10 ordinary shares. The 1000 bond gets converted to 10. So then if you are interested to know the number of bonds, you can work out. The price is given. So if it is find necessary, you can even work that out. In Super PLC at the maturity, so it gives the option to convert into fixed number of shares. The organization of a similar risk profile have recently issued debt with similar terms. So when an organization from the same industry, they have, organization with a similar risk profile, they have issued a debt with similar terms, but without the option for conversion. The same instrument, but except the conversion option. The market require rate of return of 10% per annum on such securities. Then you can see that when the market expect 10% for a bond without a conversion option, and here we are issuing a convertible bond at 8% per annum. Then how we have managed, how Super PLC had managed to issue this bond at 8% per annum, when the market looks for a return of 10% for a similar instrument. What would have been the reason here? මොකක්ද ඒකට හේතුව වෙන්න ඇති පුතාලා? Yes, I'm waiting for your answer here. Yes. So what do you think? So why is that? So a simple reason, yes, okay, good. We attempted that. If converted, the holder receives the shares, not principal. Okay, so you are somewhere going in that direction, okay, to attract the investors, is that? So when we offer less interest, does that attract the investors? The market required rate of return is higher than the rate offered by the company. Okay, right? So I do appreciate all your attempts. So here you can see with the, so we offer 8%, but for a similar instrument, right? Similar instrument may offer 10%. So then how have we managed? Yes, very correct. So how have we managed to issue this instrument by only paying 8%? It's simply because we do have a conversion option, isn't it? So here, since we offer a kind of a conversion option, we compensate that. So if you consider about the similar bond, what is being issued in the market, there they do not have that conversion option. So therefore, they have to offer something more. So that's how they attract the investors, as you have highlighted. But in our case, since we are offering a particular product with some more benefits, with more frills, no? So we are offering a particular product with more benefits. So here we can see that even we are giving the conversion option, right? So since we are offering a kind of a conversion option, there must be a compensation. So therefore, we better offer less interest rate. එතකොට අපි conversion option එකකුත් දීලා අපි 10% උත් දෙනවා නම් මොකක්ද ඒකේ තියෙන benefit එක entity එකට නේ. එතකොට අපි 10 conversion option එකක් දෙනවා නම් අපි ඒක compensate කරන්න ඕනේ. එතකොට ඒ නිසා තමයි අපි අඩු rate එකක් offer කරන්නේ. එතකොට market එක still attracts because our instrument is having the conversion option. So that is the rationale how we have managed to issue this at a lower interest, because the market may expect 10%, but if the option for conversion is not there. So if it comes with the option to convert, then the market may be ready to accept something less, right? That is rational. Okay, good. Then it asks, provide the journal entries for the initial recognition of the financial instrument in the financial statements of Super PLC. So it asks you to come up with the journal entries for the initial recognition. For the initial recognition, you are supposed to come up with the journal entry. So here, as we discussed in the second question, you can see the debt component and the equity component is there. So therefore, we need to distinguish the debt component and the equity component. So then how we do that? So how we can manage to do that? So first, considering about the debt component. So in that, what is the technique that we are going to use? So we are going to simply forecast the future cash flows. We are going to forecast the future cash flows of this particular instrument and get them divided by the market rate, right? So if you manage to get them divided by the market rate, there it comes the value of the bond. There it comes the value of the bond, right? Then if the consideration that you have received is more than, right, more than the value of the bond, the residual component, that is the equity option. That is the equity option, right? Okay, so we may exercise that. Right, it's a kind of 3-year bond. Since this is the first question, I thought of working this together. So because one more question is left, so therefore you can try that out. So we may see this together since even we are running out of time. So let me take a particular account, or I would say 2 accounts I might take. This is for the convertible bond. This is for the convertible bond debt component. Debt component. This is about the bond, that is the equity option. Equity option, right? It's convertible bond. Equity option. Right. So again, we can only see the word document. I said so. So I thought that I have. Oh, sorry for that. Right. Thank you very much for that. Okay. Now I think you can see that it's convertible bond, debt component, and the equity option. Right. Okay. So how we can do? So your starting point is going to be the bond or the debt component. So in that, what I have asked you to do, forecast the cash flows throughout the period. So you are in today, then what are the cash flows that you may be getting? It's going to be the what do you call that, the coupon. No, you are getting the coupon from year 1 to year 3. So at the end of each year, so today you are in 1st of April 2017, so you are getting the coupon for the years, that is 31st March 2018, 31st March 2019, and 31st March 2020. So in fact you are paying, because here you are taking the perspective of the issuer. So therefore you have to pay coupon on this date. So it's 5 million. Let me take the figures in thousand, that is into 8%. So here when you take the coupon, how you take coupon? It's always at 8%. So the coupon must be taken at the face value or the par value into the coupon, right? 400,000. So each year you are paying the same. Each year you are paying the same, no? So okay. So you are paying the same coupon. Then at the maturity, what you have to do? The principal at maturity. So in the maturity, you know, so if the investor requests, you have to pay the value of the bond. So you are going to redeem them at the par value, right? Okay. So the face value is, par value is 5 million. So you are going to redeem them at par value. So now you have the cash flows. So this is the cash flows that you have, coupon and the principal at maturity. Sorry. Right. Now you can get them discounted. So when you are going to discount, this is the cash flow. And you need to apply the discounting factor, discounting rate at what value? It's the market value. So the market value is 10%. Market rate is 10%. So you can easily get that market rate. So most of the time in case of your examination, you would be given the rates. You would be given the rates. So therefore you can simply apply and get the answers, right? But here it was not, so we did that. So you discount the cash flows. So this is the discounted values. Let me keep it. Discounted cash flow. Cash flow. So then if you get the value of this instrument, it's going to be how much? So this is going to be the value of the instrument, the liability, 4,751.31. You forecast the future cash flows, get them divided by the market rate, and what you get today, that is your value of the bond, right? So here you can do them in different ways. So here you can see, here it is the annuity. So if you apply the annuity factor, you could also done that. So you can take different approach, right? From year 1 to 3. So this is the cash flow. You can apply the annuity factor over here. So it's application of finance. So if you take 5,000, you can apply the discounting factor, right? So if most of the time in case of the examination, you are given the annuity factor and the discounting factor. So having applied that, you could have get the same answer, right? So whatever it is, you may try that. You may apply them and get the answer in a method that is convenient to you. So it is application of your finance knowledge. Okay. So this is the debt component. Now what? You need to identify the equity component. So how do you do? I told you that you need to take the cash consideration that you get. So the consideration what you have got That was 5 million. Now you know the value of the bond, this much. Then consequently, how much is the difference? And that is what we call the residual interest. And the equity component, there it comes 248.6. So that is the equity option. So this is it. So you have taken the convertible bond debt component first, and once you get that, if you deduct that from the consideration, you get the equity component. So because it's always the residual interest, equity option, right? We got it. So that's about the initial accounting. So you can provide the entries here. So it is cash, 5 million, convertible bond, debt component, 4,751.31, 248.69. That was the equity option. So this should be your answer for first question. Provide journal entries for the initial recognition of the financial instrument. Okay, this is it. Then it asks you to calculate the interest for the year ended 31st March 2020. Now here you are in 2017, so therefore you are supposed to account for the bond throughout the period and identify the interest expense at the final year. Hence, you need to consider, and you need to continue to account for this throughout the maturity, up until the maturity, right? Okay, then how we do? Now you have the debt component separately, equity component separately, then go and do the accounting separately. So when it comes to this convertible bond, the debt component, you know, the default position or the default accounting for a debt instrument is going to be the debt instrument at amortized cost. So අපි දන්නවා debt instrument එකක් typically අපි account කරන්නේ අපි යන ගොඩක් වෙලාවට derivative එකක් නම් අපි දන්නවා ඒක fair value එකට account කරන fair value through profit or loss. නමුත් ගොඩක් වෙලාවට debt instrument එකක් අපි account කරන්නේ amortized cost. ඒකට අපි කියනවා default position කියලා. So therefore here you can see that so they would have to account for till the maturity. So the accounting treatment is going to be the amortized cost. So now you can apply the amortized cost. So what do you mean by the amortized cost? So when you come to the standard, when you look at the definition, what it says that the amortized cost is you take the amount outstanding at the beginning of the period, then you compute if it is a liability interest expense at what? Interest expense at what we call the effective interest rate. By applying the effective interest rate to the amount outstanding at the beginning of the period, calculate the interest expense. So how much it is? The amount outstanding, this much. What was the effective interest rate? That was the market rate, 10%. Right? So once you apply that, this is it. So this is your interest expense for the year ended 31st March 2018. But that is not what the question asked, but it is 31st March 2020. So we may need to continue this, right? Then we've been discussing about what is amortized cost. It says that amortized cost is take the amount outstanding at the beginning of the period, then add the interest expense at the effective interest rate and deduct the coupon. Then it says deduct the coupon. It was coupon එක අඩු කරන්න කියලා කියනවා. And what you get, that is amortized cost. So අපිට ලැබෙන්නේ මොකක්ද? අන්න ඒ යගේ තමයි amortized cost එක කියන්නේ. So therefore if you take the amount outstanding at the end of the period and that is what the amortized cost. So ඒකට තමයි අපි කියන්නේ amortized cost එක කියලා. So initially, you know, financial instruments are accounted at fair value. So this may be the fair value of the instrument. So how you have determined that, you know, when it comes to the fair value determination, you can forecast the future cash flows and get them discount at a market rate. So what you would get, that is fair value. So this is the fair value of the instrument initially, but here what you have, the amortized cost. So මෙතන තමයි තියෙන්නේ amortized cost එක. Right? Sorry for that. Okay. Amortized cost. Just want to take it to 2 decimal places. Right, fine. Okay. එතකොට amortized cost කියන එක පුතාලා liability එකකට දෙන්න පුළුවන් asset එකකටත් වෙන්න පුළුවන්. දැන් මම මේ liability එකට අදාළව තමයි amortized cost එක define කරේ. දැන් asset එකකට උනා නම් ඒකේ අනිත් පැත්ත. Take the cash or the amount outstanding at the beginning of the period, then compute the interest income at the effective interest rate. So ඒකේ නම් interest income එකක් නේ තියෙන්නේ. Then deduct the coupon, what you get, that is amortized cost. So therefore, when you are defining it for an asset and the liability, the context needs to be considered. So when it comes to a liability, the crucial feature is that that is interest expense. If it is a asset, it's interest income. That's the difference, right? Okay. So then you take the balance brought forward for the next reporting period, 1st of April 2018, and you would do the same. Then take the amount outstanding at the beginning of the period, apply the effective interest rate. So effective interest rate in the sense that is the IRR, the effective cost. Effective cost. ඇත්තම පිරිවැය කීයද කියන එක. Effective interest rate එක කියන අපි ඒක. මේකේ cost එක ඇත්තටම කීයක්. අපි 8යි offer කරන්න කිව්වට මේකේ ඇත්තටම අපි 10ක් offer කරනවා. ඒක තමයි ඇත්තම cost එක. තමයි අපි කියන්නේ effective rate එක කියන්නේ. So this is the value that you get at the end of 31st March 2019, but still you need to continue this for 1 more year. So this is going to be last. And so here it comes your answer for the question. It was for the 3rd year. Like that. Effective interest rate, I'm just showing. Now you are familiar, but still I'm showing that for the sake of completion. And then you take the cash, and that is 400. So if you have worked that out perfectly, you would witness the amount outstanding has to be 5 million. So that's what the situation. Yes, it's 4,999. It's a rounding difference. So if you remove the decimal places, it simply becomes 5 million. මේක තමයි එතකොට අපිට අහන්නේ අවුරුද්ද අවසානයේ වටිනාකම කීයද කියලා. It's going to be 490.91. So you can type 490.91. No? Okay. So this is your interest expense. Then it asks, what is calculated carrying amount of this financial instrument as at 31st March? So what is the carrying amount? It's 5 million. So don't carrying amount එක million par. That's 5 million. Okay, so that is what the question it was asked. But now let's consider the 2 instances. So once you come to the maturity, you know, yeah, before we move on to that, are there anything that you would like to get clarified with this respect? Yes, Kutala? Yes, fine, no? Okay, right. Now let's look at in the maturity. There's two options. Let's say that there's an investor, he may ask for money. What if that particular investor asks for money? No problem. Then I forgot to do one thing. I have just discussed about accounting for this debt instrument throughout the period. Then what about the accounting for this equity option throughout the period? The good thing about equity is that when it comes to the equity, there's nothing called the remeasurement. You don't have to remeasure the equity. Once accounted for, that's it. එතකොට equity වල තියෙන දෙයක් තමයි අපි equity remeasure කරන්නේ නැහැ. සෑම reporting date එකකටම remeasurement එකක් නැහැ. Once it is accounted, that's it. Once it is accounted for, that's it. පාරක් account කරාට පස්සේ initially account කරාට පස්සේ ඒ තියෙන value එක සෑම අවුරුද්දක් අවසානයේ balance carried forward, balance brought forward කරන්නයි තියෙන්නේ. එතකොට අපි ඒකට account කරා කියලා හිතුවනම් මෙන්න මේ විදිහට ඒක ඉදිරියට යනවා. ඊළඟ අවුරුද්ද පටන් ගත්තා. දෙවෙනි අවුරුද්ද ඔන්න අවසන්. තුන්වෙනි අවුරුද්ද පටන් ගන්නවා. forward මේක තමයි දැන් තියෙන තත්ත්වය. හරි. So when the situation like is this, let's say that particular investor asks for the money. So what you do? Okay, just pay him cash. Then it's only given. Then what about the amount outstanding here? 148.69. What about that? So the standard says that you need to retain that within the equity. You need to retain that within the equity. So therefore, you used to show them under the equity. So there was a particular reserve equity option, 248.69, right? So what you can do? So you can simply show them under the equity. But the point is that this must be considered as a non-distributable reserve. So මේකට පුතාලා කිසිම දෙයක් වෙන්නේ නැහැ. මේක අපි equity වල දිගටම පෙන්නගෙන යනවා. හැබැයි මේක අපේ non-distributable reserve එක. ඒ කියන්නේ dividend එහෙම pay කරන්න මේ reserves use කරන්න බෑ. ඒක equity වල තියා ගන්නවා. හැබැයි it's a non-distributable reserve. ඒක තමයි යම්කිසි හේකින් මේ කියන debt bond holder exercise කරොත් option එක එයාට maturity එකේදී value එක දෙන්න කියලා අපි මේ 248.6.9 දිගටම equity වල තියාගෙන යනවා. හැබැයි ඒක non distributable reserve එකක් වෙනවා. Right? That is the case. Now let's think about a particular investor. Let me copy that. Let me copy this and take the same. දැන් අපි හිතමු investor කෙනෙක් ඉන්නවා. He says that he want to get this conversion option එක ගන්න. Then what happens? At the maturity you don't have to pay money, but that must be converted into shares. So therefore you need to take this to the share capital. So you debit it and take that to the share capital. एक दिन यानी share capital account එකට. කීයද? 5000. ඒක ආවේ කොහෙන්ද? Convertible bond debt component. එතකොට consideration එක මාරුනේ. Then what about this 248.69 that you have? Take that also to the share capital. ඒකත් ගන්න share capital එකට. ඒකත් part of the consideration. ඒකත් කොටසක් වෙනවා මේ consideration එක. It comes from equity option. මෙච්චරයි වෙන්නේ. ඒ option එක ගත්තොත් මේක තමයි treatment. එහෙනම් share capital එක 5248. 5248. That's it. ඔයාලට අවශ්‍ය නම් work out කරලා බලන්න share එකක් කීයක් වෙලා තියෙනවද කියලා. ඒතර ඔයාලගේ ඔක්කොම තිබ්බ 5 million consideration එකක් initially. ඒතර 5 million consideration එකක් තිබුණා. Bond එක value එක it was 1000. So therefore how many bonds were there? Bonds කීයක් තිබ්බද? Bonds 5000 bonds. The question එකේ කිව්වා each bond can be converted into 10 shares. If I'm not mistaken, is that each bond can be converted to 10 ordinary shares. So 10 ordinary shares. So the shares kiyak issue velada? It's 5,000 into 10. Shares 50,000 issue vela. So consideration if it is 5,248, 690, let's say. So taking in the full terms. So take up with what is the price per share? Share එක මිල කීයක් වෙලා තියෙනවා? This is the price per share. Share එකක් issue කරලා තියෙන්නේ 104යි 7ට. Price per share. මම නිකන් හොයාගත්තේ ඒක අදාළ වෙන්නේ නැහැ නේ. ඒක අවශ්‍ය වෙන්නේ නැහැ පුතාලා. ඒක මම නිකන් work out කරලා පෙන්නනවා. Right? That's it. So this must be the accounting trick. So, but if you refer a material that is from a different context, you know, in case of the materials of ACCA or CIMA, you would find that this is little different because in those, especially in UK, so for these shares, there is a nominal price. There's a nominal price. But in our case, we don't have this nominal price. So therefore, considering the nominal price, sometimes, not sometimes, considering this nominal price, they may take the difference to a share premium account or share discount account. පුතාලා සමහර රටවල මේ nominal price එකක් තියෙනවා. ඒතකොට මේ nominal price එකක් තියෙන වෙලාවක මේ conversion එකේදී ඒක result වෙනවා share premium or share discount කියලා. ඒතකොට නමුත් අපේ context එකේ අපිට එහෙම දෙයක් නැහැ. Share account එක පැහැදිලි වුණේ නැහැ කියලා කිව්වා. Okay, right. So let me explain it again. So here, let's say that at the point of conversion, a particular person says that, okay, convert this bond to shares. Shares වලට convert කරන්න කියලා කිව්වා. ඒකට අපි දන්නවනේ ඒකට consideration එකක් තියෙන්න ඕනේ කියලා. Then where the consideration comes from? So here the value of this bond is 5 million, debt component. So debit that account and credit that to the share capital. Not only that, you can remember there is a conversion option was there, conversion option. So there, the equity option value was 248.69. So make sure to transfer that to the account. That's it. That's the accounting treatment. HRI accounting treatment. ඊට පස්සේ මම පෙන්වුවේ පොඩ්ඩක් additional දෙයක් කරලා මොකක්ද මේ share එක price එක කීයද වගේ තත්ත්වයක්. මම නිකමට ඒක work out කරලා පෙන්නන්නේ, right? I just work that out and show you how much it is. So there the question had said that each bond is 1,000 and it was 5 million. So therefore, thereby I identified how many bonds were there. Then it was said that each bond can be converted to 10. So I converted that. So having taken the consideration and divide by 5,000, I just work out. Divide by 50,000, I just work out the price per share. That's it. Okay. So in case of a different context, what I was telling that like UK, so they were having nominal price. If the question had said that the nominal price 100, then you need to make sure that in the share capital account, you are only eligible to keep number of shares into nominal price, like 5 million. So therefore only 5,000 can be retained. This 248.69 must get transferred to the share premium account. ඒක පුතාලා මේක අපිට අදාළ දෙයක් නෙමෙයි. නමුත් පුතාලා study text එකක් භාවිතා කරොත් ACCA සීමා වගේ දෙයක ඔයාලා දකි. ඒකට තියෙනවා shares වලට nominal price එකක් තියෙනවා. ඒතකොට මේ nominal price එකට අදාළ ප්‍රමාණය විතරයි share capital account එකේ තියාගන්න පුළුවන්. ඒතකොට අපි හිතුවොත් nominal price එක 100 කියලා, number of shares 50,000. ඒතකොට nominal price එක 5 million වෙනවා. ඒතකොට මේ account එකේ තියෙන්න පුළුවන් 5 million. එහෙනම් වැඩිමනක් තියෙන 248.69 transfer කරන්න share premium account එකට. ඒත් අපි ඉගෙන ගන්න දවස්වල ඔය share premium, share discount කියන concepts තිබුණා. Namuth, with the launch of the Companies Act number 7 of 2007, so that share premium, share discount disappeared. So we are no longer having that, right? Okay. So it's something not applicable for us, but just to tell you, right? Okay. Right. So that's what we can discuss for the day. So we'll be taking another tutorial. There we'll be discussing some more important content. So like how to account for the financial assets, financial liabilities, and the equity further. And yes, and thank you very much. So that's it for the day. Good night, you all.